In this video, I'm going to be going over the wealth transfer and how we are in the wealth transfer already today due to rising prices all across the board in different sectors. So if you don't know, now you know, we are in the wealth transfer. There's many people that cannot afford the high prices when they go to the gas tank, their housing costs, or when they get ready to buy a home, the new prices and sticker shock of these homes that they want to buy. Also healthcare costs, car insurance, food prices, anything that you can think of has went up. And they said except for rotisserie chicken. So we are in the wealth transfer where people are not able to afford the things they used to could afford, and now they have to either move down, or there's some people that are, got their hustle on and they're making even more money and they're able to move up a class. So the wealth transfer has begun. Is either you have it or you don't. I'm going to be going over the future of 2023 and what it's getting ready to look like. Okay, now before I get to that, like I said, the economy is shifting. It's shifting into a new direction. So there's going to be new investment opportunities that you can take advantage of right now, where you don't have to work a second job. You don't have to change careers. These investments, when it shifts, they're low price investments right now. But as the wealth transfer shifts and the wealth transfers from old businesses to new business models, these new business models are going to give you a financial explosion. And this is what I call it, a financial explosion. That's what you're going to get ready to have if you invest in these investments right now. So I'm going to leave a link in the description below and sign up, and I'll send you the one free investment. You don't need to be all across the board. There's many different YouTubers tell you to invest in NFTs, digital marketing, make content every day, invest in Bitcoin. And it seems like every day they got a new coin coming out that you should be investing in. I noticed all across the board on the YouTube platform that most of the stocks that were given out, even by some guy named Jeremy and another guy named Chris, they was giving out these stock picks during when the stock market was high, and these stocks failed across the board. When it comes to investing and being in the wealth transfer, you want to recognize new investment opportunities before they happen. And that's the way you're able to move up the wealth transfer ladder. You want to get down on the bottom floor, so when these companies blast off, you're able to blast off with them. So go to the link in the description below. Get that information. The information is free. I'm giving you one free investment that's about to explode. If you're not shorting real estate firms like EXP, Redfin, Remax, you are seriously behind the board when it comes to real estate. Real estate is gonna dramatically switch and change during 2023. See, right now we see that home prices have gotten so astronomically unaffordable that buyers are dropping out, sellers are slashing their prices. And then along with the rising interest and mortgage rates, it's leaving people on the sidelines not even wanting to take advantage of the home transaction to build wealth for their retirement. So that's going to leave a huge opportunity for certain major players, certain key players, to come in and to even buy more real estate at a lower discounted price. So what I always say is, if you used a realtor in the past 3 months to buy real estate, your realtor wasn't very smart, because home prices are getting ready to drop and sellers are slashing their prices like crazy. So that means that if you purchase high 3 months back, you're now going to be underwater. And it's a stupid mistake. Most realtors do not have common sense or do not see what's getting ready to happen in the future. So you have to be prepared and you have to have a plan going into 2023. So here's what's going to happen in 2023. There's going to be a collapse all across the board. You know, Walmart, Amazon, Target, all missed their numbers and gave bleak outlook in the future for their business. So that means the lower class and the middle class is getting ready to highly suffer. They're getting ready to suffer like they've never seen suffering before. And this is unlike 2008, because in 2008, we didn't have this explosion of inflation. So about to have an explosion of inflation. Businesses are gonna suffer. You're gonna see massive layoffs, where people are not even gonna be able to find jobs. And even if they do, can't hardly keep up with their bills, and you're gonna see a lot of people switching careers. You're gonna see people in careers that you normally wouldn't think they would be in that career. You're gonna see probably a white collar worker switching a career to going to a corrections job. You're probably gonna see someone that's in sales. They're probably gonna be a garbage man. You know, things are getting ready to switch across the board in regards to jobs, because some of these cushiony and comfortable jobs are getting ready to be obsolete. Now, with everything that's going up, there's going to be people less affording their homes. Cars, they're going to be ditching the cars. Rising insurance prices are going up. Car prices, the medium average of a car price is about $45,000. I mean, that's higher than it's ever been. You could probably, and that's not even for a luxury car. That's just a plain old car. Luxury car used to cost that much, between $45,000 to $50,000, but now you're probably getting a Honda Civic for about $45,000. People are going to be ditching their cars more. So you're going to see that Uber and Lyft is going to be up ramping their probably promotions and advertising to get into that sector where, you know, there's people, you know, playing on people's transportation needs, because you're going to see them going towards public transportation. Now, as far as food prices and things of that nature, they're saying that the food prices should come down because of over inventory. But the prices of gas are so high, is leaving people with still a little bit of money to purchase food. So you're going to see a lot of restaurants close down, massive layoffs in the restaurant business, while Joe Biden just signed a $4 billion revitalization for restaurants. They're gonna have the stimulus money, just like Trump gave us in the past, gave us the stimulus money, but it wasn't even enough money to keep up with all of our bills. But luckily, the stock market was high, and we was able to invest and do our little side hustles, because the economy was still good, because it had that influation of cash of the stimulus money, from the stimmy ballers all the way down to the PP loan fraudsters. So you're going to see cutbacks on transportation, housing. There's going to be more renters. We are going to become a renter nation. There's people that's going to ditch their house, but then they're going to rent their house, because housing costs are going up. You know, prices at the pump is going to leave you considering, you know, whether I should fix this in my house, whether I can make a mortgage payment, or whether I can eat or pay gas, or healthcare costs are rising. American citizens have been traveling overseas to, you know, get some of their health needs met at a cheaper cost. So that's where we're going to see this wealth transfer, because you're going to see that people who had that were making $100,000, $200,000 a year, they're gonna have to constantly dip into their 401k, and they're gonna have to constantly dip into their savings because everything is going up and they're not able to keep up with their regular pay. So in 2023, it's not going to look good. It's going to be a very, very rough year. I'm predicting around 2024 that we're going to, come out of it. We're going to see a little bit of ease. But once we come out of it in 2024, everything is going to be changed and transferred. Let me say it again. Everything is going to be changed and transferred because we're seeing the shift of new companies that's entering the space based on demands and needs. And the demands and needs is that everyone is cutting what they're spending back, and their wealth is being transferred. So, give you an example. Someone with a car is not going to have a car, but they're going to need to move around. Let's say that's a wealth transfer, a car wealth transfer, but they're going to need to move around. So how are they going to get around? Either through public transportation or through Lyft or Uber. Okay? Now, someone that has a big house might say, I want to downsize. So if you're in a house right now, you're in a kind of difficult position because, number one, home prices are up. Number two, they're too expensive and you're going to have to slash prices. Number three, probably not going to have anywhere to go to afford these new prices. So you're either going to have to, downsize, or you're going to have to, sell your house at a lower price because you didn't sell it within that 3 months, where you had these unintelligent realtors that was telling their clients to buy homes in that 3 months. So then when the rates rose, a lot of buyers had backed out. So now you're going to have to slash or cut the price of your home. So that's going to leave you in a state of, either renting a home again or renting an apartment. And that's where some of the major players in that real estate market that you've never seen before, if you've seen, it's going to take a large chunk or a huge chunk of it. So right now, I would be shorting those real estate firms. Make sure you get that financial explosion, because it's going to tell you where to put your dollar, where to put your money, so you can take off and keep up with this wealth transfer, and you won't get left behind, because a lot of people are gonna get left behind. A lot of people are switching careers. I'm seeing it every day going into the stores. There's people that's working white collar jobs that had very, very good jobs, and now they're working at Home Depot, they're working at Lowe's. Nothing wrong with that, but they're taking a price cut because there's massive layoffs that are really coming and happening out there. As far as healthcare, of course, you're going to see healthcare change all across the board. I mean, we're in it. We're getting it from all sides, and people are getting hit out there. They're getting hit out there. This economy, the numbers that they're reporting, they're saying it's looking like a recession, but we are in a depression. And my only goal is to help you to get out of it and to stay ahead of the curve, because I see what's happening and I see what's going on, and I see the future and what's coming on down the line. It's not looking good. It's only going to get worse. It's only going to get worse. I've played the oil and the gas. They went up dramatically. I made a very good investments. CVE, WMB, Tellurane. That's another one. It's a very low, cheap stock, and gas prices went so high that drove those stocks up, where those stocks are now high. So if you didn't get them at the bottom, you're gonna be paying, an extra pretty penny for them. So you've missed that wave uh, of income or great investment doing that oil play if you didn't get into the oil play. But I'm gonna give you another wave of companies that are about to take off during this whole system switch and this whole transfer, and it's about to explode your financial situation. I mean, you have to take this seriously. I know some of you are gonna be going back to school. You're gonna be switching careers. You're gonna be in that rat race. You cannot outwork inflation. That's the major point. You cannot outwork inflation. It's coming no matter what. It's coming no matter what. You can't outwork it. Even if you get a 8% raise and inflation is 20%, I mean, that's not helping. You're gonna need investments that's gonna give you 50 to 80% return. 50 to 80% return, and there's investments out there that's like that you can be able to take advantage of, and once those new companies come in and they start going up, then you'll be able to reap the benefits of high rewards. Same thing with 2008. The housing market crashed, the economy all across the board. People defaulted on their loans. So banks, obviously anything financial had went down because people were losing their homes and the foreclosure rate was off the charts. They were off the charts. So you can see Bank of America, Wells Fargo, all of them went down. But if you had invested in them, because you knew that the government wasn't going to let them fail because of how the U.S. economy is set up with the Federal Reserve Bank. Now, the Federal Reserve Bank dispenses cash to these banks that you bank with. So they're not going to let them go out, because who are the Federal Reserve going to give their money to when they start printing money? So if you would have got in the Bank of America at $5, and Bank of America right now, I think is at $40, you've made a good investment. And you made a high cash return also while collecting dividend, also with Wells Fargo, First Horizon, Regional, even some of the bankers like Goldman Sachs, even some of the investment companies. You would have got a pretty penny. You would have been rich or nearly rich just by investing in them at that low amount. So you don't want to miss this chance or this opportunity that's about to hit you in regards to this wealth transfer. It's all confusion across the board once you hear this YouTuber or whoever, digital marketing, get into digital marketing, go into NFTs, make more content. You should be on there, bum, 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 bum. You're gonna need a better game plan than that, which is less risky, because you can start up a business, put all your money into it, and then it fails. Any investment is risky, but you try to lower your risk. And in business, you really can't lower your risk, not unless you're in business, and a business that nobody else is in. Then you can dominate it and take over it. As far as business versus stocks, I mean, I'd rather be in stocks, because you're not taking any responsibility and you're lowering your risk. There's things as far as in business, taxes, and being successful in business. People's first 5 years in business is always the most important, and most the people that go into business, 80% of them either fail because they've run out of money. So you want to build that cash reserve up in stocks. Two of the biggest vehicles of wealth in America is stocks and it's real estate. But real estate is risky too. You have to find renters. Say case in point, this period that we're in, where housing prices are up sky high through the roof. What are you going to do? It's not that many good investments out there. Then you have to deal with renters, buyers, flipping their home, and it's a whole lot of stress involved. So stocks is the easiest option. Once you make the money off the stocks, you want to come into the real estate to save on the taxes. Real estate is an inflation protection, and also to lower your costs on taxes. And that's the reason why you should be in real estate. Those are the two main reasons why you should be in real estate. You shouldn't really get into real estate saying, I'm gonna make this a money making business or it's gonna make me rich overnight. It's not gonna make you rich overnight. I mean, the equity, how the equity and the whole prices went up, that's a one in a lifetime opportunity. Home prices do not go up that fast. And when these builders build these homes, and they're gonna lose money on these homes, you're gonna see the prices of home prices come down. And then you're gonna see them go gradually up. They're not gonna go, one day like stocks, you sitting there and the stocks go up all of a sudden one day out the blue. You're not gonna see that with real estate. You just get in there with taxes, and also tax free to save on your taxes, and also to protect you against inflation. So go visit that link to get your financial explosion.